So the government's on the hunt for money. It's quite a story these days, isn't it? Where are they going to find any money from? Well, they're talking about, well, the government probably have to borrow some more money. Well, the only problem is nobody's lending any more money. Who's going to lend? China? They've been done with loaning money for many months now. Russia, they got their own problems. Europe couldn't lend anybody a dime. So the government needs money. Well, I've been thinking about all this, and I'll tell you, my conclusion on it hadn't changed a bit. The overall game is, and they're going to have to go in and raid everybody's 401ks. They're going to take them over, and they're going to call it, well, now the Treasury they'll annuitize your 401k. And they've already come out and said that they're doing that. That was about a year ago. I've included that article in a couple videos. One a long time ago and one just recently again. But that's that's about $4 trillion sitting in these ETFs. And in other words, 401k funds. That's what they are. The ETFs are the 401ks and the pensions and the state pensions and all that. So are they going to go and do something where now they're going to have to, the interest rates are going to climb up? If they claim that they're borrowing some money, interest rates are going to have to go up. And they've been having the luxury of a 0% interest rate for a long time. And we're still in the trouble that we're in. So what's going to happen when the interest rates go up? They can't have that. They can't have it. So, one morning, I expect one morning soon, people are going to wake up and say, well, guess what? The Treasury now owns your retirement. And then the Marxism comes into play where you're going to have to play just by your rules to get any money out. And they'll find any excuse not to give it to you, too. Well, they're up against the wall with this debt ceiling thing. Supposedly, of course, this is being run through the media, so you really can't trust anything you read about what's going on. But Saturday morning, something was supposed to happen. The Obama I want the plan by today, and nothing happened. I guess this is all now just two people's responsibility. Bonner and some other Republican. It's just their deal, Obama said, you guys give me what I want, and it's all on them. How stupid can how stupid can this all be? It's ridiculous. Nothing but passing the buck. The buck definitely doesn't stop in DC anymore. No, the buck just stops with the American people. And they'll find it, $4 trillion in $4 trillion in these 401ks and pensions. Look, they've already taken, I just have to estimate 200 billion, because 3 weeks ago the number was 120 billion out of the government pensions that they've already taken. So what is it now? And now we got news. This is an article I'd just like to pass on to you. It's from Friday, and I was going to do it Friday, but one thing lead to another. But anyway, Treasury to stop funding its market manipulation fund to delay U.S. bankruptcy. Now actually we ran out of money way back in the U.S. reached the debt limit on May 16th, 2011. Well, now they're saying it's July 2nd. The actual date is July 22nd, or August. They're saying that they need it by August 2nd. The real date is July 22nd. Just that alone, it's all screwed up. They ran out of money, 2 months ago. So they've been pillaging the G Fund, the Civil Service Retirement Fund, the Disability Fund, CRSDF, also known as the Government Retirement Funds. Okay, Tim Geithner was just forced to resort to the final debt ceiling extension measure, suspending reinvestment in the Exchange Stabilization Fund, better known as the mechanism by which the Treasury manipulates the stock, bond, and FX markets, oftentimes indirectly. Wow. Well, I thought that was all highly illegal, and I thought for like 3 years they've been telling us, oh no, there's nothing manipulated. What? manipulation of the stock market. Oh no, that's highly illegal. Well, now they're just like, oh yeah, well, yeah, we're out of money to manipulate the stocks anymore. Now, that's what I've been doing videos on for like 3 years, right? And back then, I love going back to look at some of those videos, you know. Oh, you're crazy. What do you mean they're manipulating the stocks? Oh, no, it's just, no, they're trading, you know. Just look at the chart. You know, come on. See, from the Treasury. Update as previously announced, Treasury to employ final extraordinary measure to extend U.S. borrowing authority until August 2nd. Today, so I guess this was Saturday, this article was updated, which is kind of good. So today, the U.S. Department of Treasury released the following statement from Jeffrey Goldstein Bloom, yeah, whatever, under the Secretary for Domestic Finance, regarding the use of the last of four previously announced measures available to keep the nation under the statutory debt limit, blah, blah. Okay, today, as previously announced, the Treasury Department will suspend investing in the ESF, the last measure available to keep the nation under the statutory debt limit in order to prevent default on the nation's obligations. Treasury must enact a timely increase of the debt ceiling. Okay, my question is, how are they going to do that? Oh, just increase it? Can't borrow anymore. It's not exactly 2008 anymore. And we got the Messiah. And everybody believes, oh, yeah, look. Oh, we got a plan now. All their plans, I mean, it's strike three on their plans. None of it's worked. None of it's worked. The U.S. reaches debt limit on May 16th, but the Treasury Department has employed three previous measures to temporarily extend our ability to meet the nation's obligations. Those orders in order taken are: 1, suspending issuance of state and local government series treasury securities; 2, declaring the debt issuance suspension period of the Civil Service Retirement Disability Fund; and 3, suspending reinvestment of the government securities investment fund. You know, I was covering this in a recent video where it was like they've already taken like 120 billion, but well, that'll be all the first stuff repaid when the magical debt ceilings increased, right? But how are they going to increase the debt ceiling? And already, no matter what they increase the debt ceiling, there's at least like 200 billion that they're just going to have to put back in there. And then what? You know, all this stuff is like a dead end road. All of it, no matter how you look at this stuff, it's just a dead end road. They don't have anywhere to go. Be very nervous, you know, about holding any of this paper in the markets. Be very nervous about it, because I really don't think they have an answer to it. And if they do anything, it's going to have a short-term effect, real short-term. So anyway, hey, I covered this article, and watch out for what they do. We'll probably see a bunch of news on this today, definitely tomorrow. So anyway, have a good rest of the weekend, and